Well, just about everything lower on Friday in the markets, with the exception of corn. Garrett Toy, Ag Trader Talk, is back with analysis. So just about everything hit on Friday by these retaliatory tariffs from China, right?
Correct. Yeah, except for corn. The soybean market, new crop beans are kind of, we were down across the board, but new crop beans are approaching that December low towards 961. Just the general retaliatory tariffs out of China. They issued the retaliation and then went on holiday. So we kind of wait to see how things play out from there next week.
Yeah, so let's talk about that moving forward. How do you bottom these markets here, Garrett?
I think the onus is on the other foot. We issued blanket tariffs across pretty much every country, and now it comes negotiation time. We're already seeing some negotiations from Vietnam. The UK agreed to lower tariffs on U.S. beef and fish late last week. So we're in negotiation phase. So as we make progress and potentially see more tariffs reduced, then we'll find some footing. But for the time being, with the Chinese tariffs and specifically soybeans, we're going back to administration or the first term playbook in South American premiums firm in the Chicago Board of Trade prices to collapse.
Do you think that this was an adequate response?
The comments that they made, the Commerce Department made about a reciprocal fair negotiation seemed more dovish, if you will. So I think they're willing to negotiate. I mean, they were kind of sitting back to see how the U.S. negotiated with Mexico and Canada. And they were kind of sitting back to see how this was going to play out. And then the big tariffs, he came out with blanket tariffs, and they basically responded in kind, So I think that they're willing to negotiate. And that's basically where we're at. We did blanket tariffs against everyone. And now we're going to have a negotiation on a country by country basis that, gets their tariffs lowered.
And of course, soybeans, one of the markets that reacted the worst, down 33 to 34 cents on Friday, down hard for the week. But did we overreact there? Because we pretty much sold all the beans we're going to sell to China for this part of the marketing year, right?
It is, but I mean, it's the market adjusting. South American cash premiums are firming. The board collapsed. This is just like trade war 1.0 as far as the playbook is concerned. Ultimately, I think that this is creating a bullish scenario for soybeans. I don't think that at face value our bean acres going to be bigger in June than they are in March. Probably not. So any sort of improvement in trade relations with China or removal of tariffs or anything of that sort, could create a pretty bullish environment for soybeans in 2025, most likely 2026. But, we don't know when this trade war is going to end. It could be tomorrow. It could be 6 months from now. It could be a year from now. And I think ultimately, as you're trying to, if you can, plan around this, I think you got to expect the worst case scenario.
Right. And are we worried about cancellations from China?
Always, but at the end of the day, they've been focusing on South America for quite some time. The unshipped commitments are only about 0.6 million metric ton. So it's less than 30 million bushel, 25 million bushel. And you combine with uncommitted to unknown destinations, it's about 2 million metric ton. Say it's half of that, maybe 1 million tons. So in the grand scheme of things, it's not a whole heck of a lot. So not too concerned. We probably will see some as sending a message, if you will. But in the grand scheme of things, I don't think it's going to matter.
Yeah. Outside markets didn't like it, and neither did the livestock sector.
Yeah, no, the equity markets are down 5%. This is we're still not quite to some of those more historical percent declines here. But, with the livestock markets being tied to equity markets, we ended, we'll have expanded limits on Monday. We closed fats lower across the board, limit lower in feeders. So, at the end, it's interesting, the April-June spread firmed here today, about a buck and a half. So that tells you the front end cash is still, the fundamental story is still there. But I don't want to say this is a function of the margin clerk because the longs, have quite a bit of money in the bank, but it's we're pulling the sticks away from the Jenga tower here, and as it kind of falls away, the top end gets a little bit heavy, and people just want to get out of the way. We're probably going to see a lot of volatility in this fat cattle market. Not to throw out numbers, but just it's going to be one of those deals. Talking with customers where we may see a big correction and then a big bounce back, and then just kind of a readjustment, if you will.
Right. Obviously, there's some concern about the lower stock market impacting protein demand and whatnot. So I felt like it was more about that than tariffs in the cattle market. But all these markets that reacted, what does it take to finally bottom those markets, do you think?
It's going to be trade relief. I mean, it's going to be trade deals with other countries. I mean, Vietnam was talked about today. The UK is lowered all tariff on beef and U.S. fish already. It's just free trade is what we're moving towards now. I will say this: everyone's worried about the stock market, but the energy markets are down as well. I mean, we've got crude down $62 a barrel. That's the lowest levels we've seen in 4 years. So while we're probably going to pay a little bit more for imported goods or boxed goods, whatever we get from other countries, we're going to see, energy is basically on sale here on a global basis, especially if you look at just North America, which, crude is not subject to the USMCA, but, we're going to see cheaper prices. RBOB is already down a dime today. Diesel was down 12 to 14 cents at one point. Cheaper fuel prices will give us a bit of a coupon while we deal with other issues.
All right, so we got the bad news out of the way. The good news, or the bright spot, was the corn market up on Friday, especially in old crop, and up for the week. And were we resilient just because of the fact that we're USMCA compliant, or is there more to it?
I think it's a little bit of both. I mean, like I said, I mentioned Vietnam earlier. We don't know what's going to happen with these negotiations. Are other countries, as they negotiate with the United States, are they going to, be willing to buy big quantities of U.S. ag goods as a negotiation tool? The big talk on today was Vietnam. All right. Well, the tariffs on ag goods in the Vietnam are very small right now, but when we implemented tariffs on Vietnam, it included a lot of technology stocks. It involved a major shoe manufacturer, so if they're trying to negotiate those shoe and technology tariffs lower, hey, we buy a lot of corn from Argentina and Brazil, but if we buy it from you, can we, work a deal? And I think that's what the market's trying to analyze. But you're right. We threw a 95.3 million acre number on it. We broke beans 30 cents. So, corn shouldn't have to worry about buying acres. I do think that there's some concerns about weather with the rains across the Mid-South and Delta. Those guys have been planting corn for 2 weeks now. So it potentially is an issue of replant, not prevent plant. But those 1 to 2 million acres that we picked up, it's in those areas. So, in a corn market, given the demand that we know in the low $4, we can't really afford to lose those acres. And, for the time being, we're holding these levels.
Yeah, I was going to say, is that another reason why we were so resilient this week, is because we need all of those extra acres just for the demand coming at that corn market?
It certainly is. I mean, it's historic times. These rains they're having across the Ohio River Valley are biblical. I mean, and there's going to be flooding, and it's going to put people behind on planting rates, and it's just, I think the market's going to try to. It's not great. We're still talking 440, 450 D's corn, but the market's going to hold in here, in order to try to keep those acres or give that incentive there to plant those acres. In 2018, 2019, the last time we had this trade war, when beans collapsed, corn went with it. It was just a follower, and even then, I mean, we had USMCA and we had deals with Canada, we had deals with Mexico. So it's just a function of, like I said, corn's not going to have to buy acres if beans are in the mid to low $9.
All right. Well, let's hope we get some long-term gain out of it. Thanks so much.
I hope
Jared Joy with Ag Trader Talk. That is Markets Now.